Markets head into today's ECB and Bank of England decisions in the immediate aftermath of a more hawkish-leaning Fed. The broad consensus is that both central banks will hold on rates, leaving the real focus squarely on communication rather than action. Starting with the ECB, the consensus is for a hold at 2%, but the meeting is unusually complex because policymakers are caught between rising energy-driven inflation and weakening growth dynamics. Inflation expectations have edged higher on the back of the Iran-related energy shock, while credit conditions remain tight and activity data continues to point to soft momentum. As a result, Lagarde is expected to strike a wait-and-see but vigilant tone, keeping optionality around future tightening without committing to a path. The key question is whether she leans more heavily on inflation risks or continues to frame price pressures as manageable, particularly given still limited evidence of second-round effects. Turning to the Bank of England, the setup is similar but with a slightly more hawkish bias. The BOE is also expected to hold at 3.75%, but the UK is dealing with a more pronounced stagflation mix where elevated inflation sits alongside fragile growth. The expectation is that policymakers will maintain a restrictive stance and reinforce the need to keep policy tight for longer, even as growth outlook remains uncertain. The focus will be on whether Governor Bailey signals a willingness to tolerate weaker activity in order to contain inflation or leaves the door open to a more flexible approach if conditions deteriorate. The broader takeaway across both meetings is that Europe is not pivoting dovish, it is pausing with the tightening bias still in the background, particularly as energy keeps inflation pressures elevated. That dynamic leaves both the euro and pound sensitive not only to domestic policy signals, but also to the global rate narrative set by the Fed. From a market perspective, the key risk is tone. If Lagarde and Bailey lean more hawkish, emphasizing inflation persistence and keeping tightening options open, that could help stabilize the euro and pound after recent dollar strength. But if they lean more into growth concerns and downplay inflation risks, the post-Fed dollar bid could extend further. The bottom line is that today is about what the ECB and is not about what the ECB and BOE do. It's about whether they validate the Fed's more cautious stance on inflation or push back against it. That's all for now.